I don't see a loss of, total agent count 4 months in a row as a big deal. I really don't, especially when the volume and the sides are up. And I don't say that just because, it's a brand I'm involved with. If you're adding really great agents and losing ones that aren't doing any business at all or very little, that's obviously a net gain.
So the big question is this: how do most agents who don't have access to the secrets that the top agents in our industry hoard to themselves grow and prosper in today's real estate environment? That's the question. And this video podcast is the answer. I'm Pat Hyben, and welcome to Real Estate Rockstars.
Real Estate Rockstars, this is Aaron Amuchastegui coming to you with the State of the Market number 38. It's crazy. We just started State of the Market, maybe 5-6 months ago, but everybody loved it. So now we've been doing it week after week after week here with my good friend Paul Morris. And today's fun news we get to talk about, it's going to be really cool. Like Paul and I got to hang out, yesterday. Some of the biggest real estate news going on right now was, this last few days was Keller Williams family reunion event in Dallas. So there's so much of the news in the headlines that's coming out of Dallas, and we're going to be really excited to talk about it. But Paul, how is Dallas for you? And where are you, back in LA now?
Yeah, back in LA. Dallas for me, because I'm part of the leadership team with Keller Williams, is it's just a frenetic sort of blur of a week. But interesting that when you look in the news, some of the stuff that we watched firsthand and some of the stuff I was working on hit the news. So that's cool.
Yeah, I had never been to the event. I went up there to go meet up with you and some other guys, for the podcast, talk to a lot of prospects, find some of the best agents out there so we could get them on here to be able to share that stuff. And I was blown away with how big that event was. Something like 19,000 agents coming into Dallas. I mean, all the big real estate companies have these big conferences like that. But man, I could not believe how many people were in there and how excited they were to talk about real estate and everything going on in the world.
Yeah. Yeah, it really is, and it we take it straight from Gary Keller's vision speech, which I've always found to be very sort of brand neutral. So his vision speech is like an economic forecast, and you can always tell where the forecasters are going to go. Just say like, hey, who do they work for? So the NAR forecaster is going to naturally have sort of a real estate bent to it. And I really think Gary goes at it and just says, hey, here's the way we think the market's going, and here are all the indicators. And so interesting to get that from sort of a brand agnostic view.
Yeah, it was. I totally agree, man. So let's jump on in. So it is funny if you go to the Inman News today on the 18th, you see so much stuff. Half of it's regular news, half of it's Keller Williams. From a lot of those announcements that happened. One of the ones that stuck out to me that I actually saw all over social media today too, a lot of people are talking about this, and is the big headline: Keller Williams to end lifelong profit share program for defectors. So what's a defector? What's that mean? What was that announcement, and do you think it's newsworthy?
Yeah. I think it's more clickbait than newsworthy, to be honest. First of all, just using the term defector, I don't look, look, it's I'm part of this brand, and I've been part of it for a long time. And, people go where they are going to have the best business experience. I think that's where they should go. So if somebody leaves another firm to come to Keller Williams, I don't think we would call them a defector. And if somebody left Keller Williams to go somewhere else, I wouldn't call them a defector. So, it's a little strong, but that's not the real point of it. The real point of it was that they made two changes. And one change was that it takes 7 years to vest, to become lifetime vested in the Keller Williams profit share program instead of 3. So that seems like a pretty large change. Yeah. I think in practice, not so much. And then also this non-compete rule, which is if you go out and you compete against Keller Williams, you will forfeit your profit share. Now, interestingly, because Keller Williams has already given out more than $1 billion in profit share. Interesting is that it's not retroactive. So it doesn't affect anybody unless you join KW after April 1st. So nobody in the profit share program, even people that have left Keller Williams, competing against Keller Williams and getting big profit share, it's not going to hurt them. So it's just moving forward.
That's an important part of that news, because that does tone it down quite a bit. And I think you're right. It may be more clickbait, because defectors is such a strong word. But every week we're talking about agents moving from one brokerage to another and one company to another. Like I mean, that's the big news that's out there, is like big offices getting transferred. And then the idea that it's not retroactive and it's just for people now moving forward. It's also smart. It is becoming more competitive. Companies out there are it's kind of like that should have been part of that a long time ago. So but maybe not huge impactful change, but maybe newsworthy nonetheless. So so how about something, as we jump around a little bit, I saw this, I thought, I bet Paul has the inside scoop on this. Says Jeff Bezos $165 million mansion shatters Los Angeles sales record. So I look at the picture over top of it, and it looks like a big place, but I don't know what makes it so special. What makes it so big in LA, or what do you know about this one?
Yeah, I mean, nice house, right?
Yeah.
Yeah, right. Okay. So people always ask about, how's the market or the high end market, and I totally exclude sales like this, okay? Because you're talking about, forget about the 1% or the 1% of the 1%, forget it, okay? You're talking about Jeff Bezos. He is the richest man in the world. Now, this home was built in the 1930s for Jack Warner from Warner Brothers. So it started out as a movie mogul's mansion just to begin with. It was designed that way. It's in Beverly Hills, where of course the dirt is very valuable. It's on 9 acres. So you're talking about a giant compound right in Beverly Hills. There are not many of those, I can assure you. Now, interesting, right? So David Geffen, who is another, industry mogul, bought it in 1990, and he paid $47.5 million for it. Pretty nice return, okay?
Yeah.
To turn around and sell it for $165 million. It's kind of like, okay, I'll retire based on that one home sale alone. So it's a big deal. Now, one of the things that I couldn't help myself doing, because I knew you were gonna ask me about this, okay? Yeah. So I did like a little of my nerdy prep, and my nerdy prep homework on this is this. Jeff Bezos spent less than 1/10 of 1% of his net worth on this home. And so to put that into any sort of perspective, okay, if you got $10 million net worth, that's solid money, okay?
Yeah, yeah.
$10 million net worth, you'd be spending 10 grand on this house. Okay.
It's like it's nothing.
Right? Like if you have $1 million in net worth, okay? $1 million. It's not bad, right? This is $1,000 purchase.
So that's why you have to throw it out, right? That's why you can't even count it, because the guy that makes the purchase, it's like play money. It's like fake money to him. Like, he obviously likes the house. Do you think that because it was the Warner Brothers house that just gives it a boost too? Like, part of me, I'm like, that's super cool. Like, how cool would it be to be like, I have the Warner Brothers mansion? Yeah.
Well, I think the sort of pedigree and lineage of these houses does make a difference, on a lower level. On a lower level for us normal human beings, you get like sort of an A or even a B star, oh, hey, I'm buying, somebody's, some television star's house. That's kind of cool. We kind of like that for sure. Yeah, this is industry mogul house passed on to industry mogul. I cannot imagine that David Geffen was not thinking, hey, you know what? I'm moving into Jack Warner from Warner Brothers, and it's got to be hitting. It's got to be hitting Jeff Bezos's radar as well.
Yeah, I think that the last thing I want to say on that so he bought it for $47 million. Geffen did back in the 90s. Yeah. Right. So now it's been 25 years, and it's worth 3 times what it was. But I bet a lot of California real estate is worth 3 times what it was in the 90s.
That's true.
Right. Yeah, so even though it was a big $100 million gain, I mean, proportionally, it probably, who knows? It'd be interesting to look at and go, did it actually appreciate more or less? But yeah, you can't count that as a big sale. There was one guy that was going to buy that. It was the guy that, for him, it was play money, and good for him. So cool. I would want to have something like that too. What a fun little playground to play in.
Do the math. It's worth every single dollar. That's a title of a comment that I got on my certified listing agent course from Rebus University. It's from Bill Reeg. This is what Bill says. Bill says, looking to take your listing presentation to the next level? I've closed 100 appointments since I took Pat's certified listing agent course. 5 appointments, 5 new clients, 60 days. Boom, do the math. It's worth every single dollar. Thanks, Bill. But listen, guys, I am offering this to you if you haven't already taken it, because so many brokers and teams make their agents take it before they do a single listing appointment. But if you haven't taken it, you can go to rebusuniversity.com and get it now. Now, here's the thing. For 30 days, what I'm going to do is I'm going to give you that course. I'm going to give you the buyer agent course, which teaches you how to close every single serious buyer that calls on the phone or emails. The certified team agent course is taught by Jeff Cohn, one of America's top agents, on how to build a team from zero to hero to hundreds and hundreds of units every year, step by step. It's like a 12-hour course, plus 7 other courses. Yes, you heard that right. All for a measly $127 a month. If you were to go to Rebus University and buy these courses individually, it costs you over $10,000. But today, if you go to futureofrealestatetraining.com, that's futureofrealestatetraining.com, you'll learn what Bill Reeg did, which is how to close 100% of the listing appointments you go on. Quite impressive. And you'll learn all the other incredible details provided in the 11 5-star courses that are offered. Yeah, it's like all you can eat bazaar. You go in now and you pay $127 a month. If you can eat all 11 courses in 1 month, that's all you pay is $197. This is a bargain, guys. Get it now. Futureofrealestatetraining.com. Hey, Real Estate Rockstars, this is Pat Hyben, and before we jump back into today's content, I want to tell you about an extraordinary offer from an extraordinary company. I'm talking about My Outdesk. If you haven't heard of My Outdesk, basically they're a virtual assistant company, a VA company that specializes in virtual assistants for real estate agents. Yeah, I'm talking about transaction coordinators, marketing assistants. I'm talking about ISAs, inside sales agents that prospect thousands and thousands of seller leads and buyer lead follow-ups. I mean, these guys are trained in this stuff specifically. You're not using a company that doesn't know or understand real estate sales. 4 out of 5 of the top teams in the US use My Outdesk for their virtual assistants. And because I know the owner, Daniel Ramsey, I've known him for over a decade, and I know how awesome and incredible this company is and how it saves agents thousands and thousands of dollars every single week and makes them thousands and thousands of more every single week, we are going to give you a $400 coupon off of your first month of a virtual assistant and give you a free book entitled Scaling Your Business with Virtual Professionals. So you can read it and look into it before you decide anything. It's called Scaling Your Business with Virtual Professionals. And you can get it real easy. All you got to do is text the word Hyben, H-I-B-A-N, to 31996. That's H-I-B-A-N to 31996. And download your free book, Scaling Your Business with Virtual Professionals. And don't forget to mention also that you get a $400 discount, which will give you a coupon for that when you download the book. Thank you, guys, and I hope you enjoy and make a ton of money using My Outdesk.
Here's some funny news. The Leaning Tower of Dallas. Right. So this is so funny. I was reading this and I was like, I wanted to ask you about it. It says Texas' newest temporary landmark after planned implosion. I think this morning or yesterday, a planned implosion of the affiliated computer services building in Dallas. A big part of the building remains. They tried to knock down this big old building. It didn't knock down. It actually kind of like a section of it came off, and now it's looks like the Leaning Tower of Pisa in the middle of Dallas. But what's the story on that?
I think now, this might be the one state of the market where, hey, I'm in all the places, right?
Yeah. Feel like a world traveler.
We're talking about the Keller Williams profit share, change. And I'm actually on the International Agent Leadership Council Forum. I'm a voting member. Oddly, I get 3 votes because I'm with 3 regions. I was in there. I was voting on it. I was right in the middle of that one. I wish I were a little bit more in the middle of the Bezos sale, either as the agent or invitee even to the home. But hey, I'm in LA, right?
Yeah,
And sure enough, you were asking me about this crazy leaning tower thing. I was like, whoa, wait a minute. I saw that. I was in a taxi cab with a taxi cab driver, and the way that I noticed it is he went like, whoa, what's that? And then I looked, and we didn't know what it was other than it sort of looked like a half blown up building. Now, when we read the news on it, they plan these things pretty carefully, and they've got the engineers, they've got, they want to do it safely, and they want to do it completely, and they detonated all the stuff they were going to do, and instead of the thing coming down on an implosion like they had expected, it just kind of like leaned over and half the building fell off. Now, I didn't see that happen. I saw it after, but, I have one comment on that, and that is they don't build them like they used to.
Yeah, they don't build them like they used. Absolutely, right. Man. It says It was on Sunday, so you saw it.
Right.
The day after it was done, or maybe you saw it the day of if you saw it on Sunday too. But that is crazy. Yeah. And I'm looking at the picture. It's this giant like concrete building, and it is really bizarre that they like literally tried to blow it up, and it just like did a little shift. But yes, we. Houses and buildings and everything used to have, there's a lot of concrete in that thing, a lot of structure, and you'd be hard pressed to find one we build today that wouldn't be able to knock down. So that is, you really are the fun news that's out there. I wanted to, it's kind of funny. So last couple things are kind of real estate news. They kind of contradict each other. So I thought it was funny. One of the items says Keller Williams lost agents in the 4 consecutive months. Transaction volume and tech adoption are up. They lost agents, but then there's another one where they were, but at family reunion, they were also announcing all these high profile teams that are switching over. So it's like the high profile California team jumps from Sotheby's to Keller Williams, the Gunderman Group. I'm sure we're going to have them on here soon, getting interviewed on the podcast to see what's going on. But so what do you think of all the news of when it's, do you think that, that people should be interested in stuff like that when, the kind of all the competition between the different agents, should that be frontline Inman news? And what do you think of that news with them in particular, or the losing agents but gaining good offices?
Yeah. So, and, I'm telling you, I tell you up front, I'm part of Keller Williams. So this is, and I promise you it's totally unbiased. And that is, Keller Williams for a long time was focused so much on agent count that we tended to get a bunch of newer and inexperienced agents who turn over a lot. Now, being number one, they're really, Gary Keller leading the charge, really focused on the top agents. Now, Gary was always focused on the top agents, but, the shift has been in the field as well. So I don't see a loss of, total agent count 4 months in a row as a big deal. I really don't, especially when the volume and the sides are up. And I don't say that just because, it's a brand I'm involved with. If you're adding really great agents and losing ones that aren't doing any business at all or very little, that's obviously a net gain. Now, one of the things that's funny is I connected with a good friend of mine, Jeff Cohn, who was the #1 Berkshire Hathaway agent.
We had him on here a few weeks ago.
Jeff, right? And I was like, wait a minute, Aaron already interviewed him on the podcast. Aaron scooped me. I love it. And then Jeff, I told Jeff that too. He was pretty quick to point out, he goes, Aaron's one of my good buddies too. So there you go.
It's the competition of people out there, as we try to get them. I mean, we are definitely committed to try to find like the best people out there to provide action. And so it was super cool when they have, 19,000 people in there, the people up on stage, or people that we've had on the podcast over the past few months, or people scheduled to be on over the next few months.
Tribeofmillionaires.com. Guys, write that down. Rockstar Nation got a free special offer for you. Now, I've just written a book, and it's just been published. Co-authored it with David Osborne, who's been on this show multiple times. If you don't know David, he is one of the top execs at Keller Williams Real Estate, was personally mentored for the last 2 decades by Gary Keller himself, and he's in all kinds of businesses. His bio and explanation and everything is in this book. But anyways, David and I got together. We decided to write a book. We called it Tribe of Millionaires. And I guarantee you it's going to change your life. To find out more, just go to tribeofmillionaires.com. We're going to give it to you absolutely free. Only thing we ask in return is, of course, number one, you pay the shipping, not a big deal. But number two, that you go on Amazon and write us a review. We're really looking to get an incredible amount of reviews. And because of that, we're giving this book away for free. Go to tribeofmillionaires.com today. Rockstar Nation, thanks so much for listening. Don't forget to stay to the end, where our guests will be offering a free gift. As you know, all of our guests offer a free gift, and all of these gifts can be found on the Agent Success Toolbox. You could find that by going to hibandigital.com/toolbox, or simply texting the word toolbox to 444-999. That's toolbox to 444-999. I am going to put today's free gift in today's show notes, but if you want all of them, including gifts from most of our guests that have come on the show, just go to the Agent Success Toolbox.
So I knew today you and I getting to talk the news with, especially with how closely all the inside track with all this stuff was going to be so much fun. Last piece of news that I thought was great came from Bloomberg. So Bloomberg Economics today, and this one hits a little bit closer to home for my background and where I came from. It says home sales jump with builders recording the best January since the crash, that's really, really phenomenal news. Now, sometimes statisticians can grab this month or that month and really find it. But I was a home builder. I worked for a home building company. I was in Southern California during the boom. Really at the height of the boom, and then that crash. And right before the boom, it was crazy. Construction starts were going like crazy. I don't know what percentage of our California economy was home building, but everybody was either building houses or being involved in the houses or, owned a restaurant near these developments. And so they were blowing up. The whole California economy was prepped up on all of that. And so home sales being best ever since the crash means, the year before the crash, January starts. That's where we're at now with home building starts. And so in January, average number of new home orders per community surged to 34%, to the highest level for the month since the housing recovery began. So that's really cool. It's really cool to see it sustain. We've talked about all sorts of things that probably impact that. We've been talking about interest rates the last few weeks. We've been talking about supply. We've been talking about demand. What's out there, nationwide home builder stuff. What have you seen out there when it comes to news with new homes and home builders?
Mm-hmm. Well, really what these folks do is they look at inventory and demand. That's just plain and simple. They look at the cycle of how long it takes to get them ramped up. Now, one of the problems that home builders have is they have a long cycle. So they have a plan, they raise some money, they buy some land. Now they're getting entitlements, then they got to break ground and build houses. So there's a long run on it, and that's why home builders get caught when there's a big downdraft in the market, because, hey, they're already committed to this process. What are they going to do now? The dirt itself, not worth nearly what they have into the process. So, we're really looking at the effect of decisions that were made, a year ago, or a certain, as well as I do what that lifespan is, but these are decisions that were made a while ago, showing up today. Now, interesting in terms of today, we're always looking at it's very simple. You've got price and you've got interest rates, and those are the two factors that drive the economics of whether somebody can afford to buy a house. Very simple. If a house is $300,000 and interest rates are 4%, you get a certain monthly payment. That's how people figure out whether they can afford a house or not. It's not that if the house was $200,000 or $150,000, but interest rates were 10%. Let's not forget interest rates were 10%. Okay, at one point in time. And now the payment is out of reach. It doesn't matter what the cost is. So it's really a hybrid, of course, of the interest rate and the cost of the house that gives us the payment, and that's how people buy houses. So as long as we see continued and we expect continued low rates through 2020, I think we'll continue to see pretty healthy sales. Now, inventory is the problem, right? And that's what some of these new home starts are addressing.
Yeah, it is such a great point, because when that crash happened and all my friends were home builders, we were home builders. I graduated in construction management at kind of the height of the housing boom throughout all of that stuff. And yeah, there is such this big cycle. A house flipper can go buy a house, fix it, and sell it, or an individual investor can go buy a house, fix it, and sell it. But these home builders are buying, vacant land, spending years on entitlements, roads. So it is a great point to remember that those starts that happened in January means they were putting in roads back in July and August.
Yep.
And they have really big economic analysis teams. They try to, a lot of them are publicly funded, huge stock companies. They have bring a lot of thought into different things on when to start and how to start. But you can't just say, let's start 100 houses.
Yes.
That wasn't a decision that was made in January. That was a decision that was made 6-9 months ago, sometimes 2-3 years ago for some of this. So it's probably that culmination of everything growing, but something to definitely watch.
And it's one of the things I love for our listeners, for sure, is that, you look at, oh, well, how am I going to compete? That, maybe I want to buy a house, fix it and flip it, or buy a house, fix it and hold it. How do I compete with these giant REITs that have huge analyst teams and all this money behind them, that sort of thing? And my answer to that is we're nimble. Okay. So that we, you and I, we can decide tomorrow to buy a house. We could go ahead and buy it, within the next week. We could, we can make decisions very quickly that the big players can't do. And, Warren Buffett, I'll butcher the quote a little bit, but he's like, oh, hey, you think it's hard to invest, your $100,000 or whatever, try figuring out how to invest $1 billion, because, it's a different world. But then again, finding out how to place that giant amount of money, hey, we have several $100 million to deploy. You and I can make a much better, faster decision on one house than they can on a whole tract of hundreds and thousands of houses.
Yeah. It's like, stay nimble, stay local, focus what you know. Like, nobody knows what's happening on my street as much as I do.
Oh,
right?
yeah.
Like, nobody knows what's happening in your neighborhood as much as you do. So as you find that niche, that's one thing that home builders on a massive scale, they look at stuff on a massive scale on a zip code basis and other things. But when it comes down to that really micro level, they can't get there. But man, that was a fun state of the market, man. I was pumped all day knowing the stuff that we'd be talking about out here. We'll be back. You've got a lot of fun interviews coming up with people. I've got a lot of fun interviews coming up with people as we get on there. And listeners, if you guys are loving the State of the Market shows, if you're loving it or hating it, go give us some reviews. Let us know what you think of the State of the Market. And again, if there's real estate news out there that we know about, if you see it, or that you know about and we should be sharing with everybody, if you see it, send it over to us. We're trying to find the best stuff that we think is actionable news for you guys. But if we're missing something, tell us. Let's make it better.
Yeah, I love it. Okay, and why don't you tell them where they can send those inquiries, and we'll end it up there.
Absolutely. Yeah. So so we go to hibandigital.com, HIBAN digital.com. You'll be able to add a comment on there. Go to RE Rockstars on Instagram. We follow that. We check out those messages, or you can find Paul or I on Instagram, Aaron Amuchastegui with an A, and Paul Morris. Paul, what's your Instagram handle?
Paul Mark, Paul Mark, MARK Morris. And that's my Instagram handle, and also Facebook, and I check that stuff. So drop me a message, and we'll take your feedback. Love it. We always want to do better. And also, if you got some questions that we can handle on this podcast, we'd love to do that.
Yeah, we would love to. And it really is. I check this stuff too. I can't check my email. I get hundreds and hundreds of emails a day from spammers. I'm way more likely to be able to talk to somebody on Instagram or Facebook to actually see out there. So yeah, reach out to us. We want to keep making great shows for you guys out there. Real Estate Rockstar Radio, State of the Market. Paul, thanks for coming on joining me.
All right, man. Thanks. I really enjoy it. We have fun doing this.
That was fun.
Okay.
Rockstar Nation, thank you for listening to Real Estate Rockstars. Listen, I need a favor. If you find this free content helpful, if you find our downloadable items from each guest helpful, please, I need you to pull out your pointing finger. Yes, the one finger that points at people, and hit subscribe. Yes, subscribe. The more subscribers we get, the better we look in the ratings, and the easier it is to get guests like Robert Kiyosaki, Barbara Corcoran, all the players that are on $1 million listing in the different cities. All that stuff makes it easier the more subscribers we get, so please subscribe. And listen, there's a lot of places you can leave comments. There's a lot of places you can like. We're on Facebook. We have an Instagram page. Instagram page is I am Pat Hyben. The Facebook is Real Estate Rockstars Radio. Feel free to leave us comments there. The most popular form of commenting seems to happen on YouTube. Yes, for whatever reason, it's a very open environment. So just go to YouTube and go to Real Estate Rockstars Radio. Leave us comments there. Some of them we will read on the show. We love your feedback. So thanks, guys, and I hope you are having a great day. Oh, and also, listen, if you're going to subscribe and you haven't already left a review on iTunes, please do that too. Have a great day, and thanks so much, Rockstar Nation. I really appreciate you.